Let's talk about Wipro now and bring in the management to talk us through how this quarter has been. Mr. Suresh Senapati, the Executive Director and CFO at the company, as well as Mr. T.K. Kurian, the CEO and Executive Director at Wipro, join in right now. Thanks very much, gentlemen. Really appreciate you taking out the time. Mr. Kurian, I want to come to you first with regards to the revenue growth. Wipro has finally seen an improving trajectory after 2 years of restructuring. What's the outlook here and how was the quarter for you?
So I'll go straight to the question, the latter part of the question, which is on growth in the second quarter. If you look at the growth in the second quarter, it's pretty much been secular across our verticals. So all the verticals have grown. Healthcare and life sciences have grown much more than the company average. They've grown at 6.4%. Telecom, which has been a hard industry in the past, has actually grown 5.6%. If you look at service lines, our global infrastructure business has grown over 5% on a constant currency basis. If you look at our business application services, which is where our majority of our application services sit, they've grown over 4%. So overall growth has been fairly secular. If you look at what we have been doing over the past couple of years, the first thing that we have done is that we have said, let's look at our top accounts and let's focus disproportionately more on our top accounts. And if you look at our top 125 accounts, we have grown 3.6%. And our top 10 accounts, we have grown 4.1%. So overall, I think the growth has been fairly decent across the board. In a way, what we have done is that moved more people closer to the customer. Our leadership today sits in geographies, they don't sit in Bangalore. And in many cases, our leadership is right now moving to areas where they're sitting right in the middle of the industry. So, for example, our healthcare business, our pharmaceutical business is out of New Jersey. Our provider business sits out of the East Coast. So it's overall, I think the way we have done it is that we have moved most of our senior management closer to the customers, and that has started making impact.
Let's talk now about the quarter 3 guidance. While on a quarter-on-quarter basis, a guidance of $1660 million to about $1690 million is anywhere between 1.8 to about 3.6%. That's fine. But if you take a look at it from a year-on-year perspective, that still falls a little short, just single-digit growths. So would we expect the second half to cause a little bit of a drag and a concern with regards to growth?
See, we give only a quarter-to-quarter guidance. So, I don't want to speculate what quarter 4 guidance is going to look like. But all I can say is watch the space and, just see what we guide in quarter 3 and then decide at the end of the quarter 3 results and then decide what the full year numbers are going to look like.
All we're seeing is that a trend whereby our sequential growths are looking good. And as we go forward, hopefully we'll be able to sustain and improve as we go forward. And therefore, till such time we get into a stable rate of good growth, I think YOY comparisons become that much less meaningful. But when perhaps we get into 14, 15, perhaps it will become much more meaningful growth rates.
All right. Talking about the EBIT margin improvement, and Mr. Senapati, come to you with this one. 22.5% was much ahead of street expectations. But how much of it was aided by currency depreciation?
It's a combination of both from an operating parameters as well as currency. Because if you've seen, when we gave the compensation increase on 1st of June, we had only one month impact in quarter 1, but the remaining 2 months impact came in quarter 2. So that was a headwind which sort of averages out during the course of the year. So not only we mitigated that, but also we got some upside in terms of the currency. So it's a combination of both that we saw a 250 basis points margin expansion for quarter 2.
Right. Mr. Senapati, can you also share with us the volume growth as well as pricing details this quarter?
Yeah, I thought a lot of debate had happened in the analyst world, and they said that it doesn't become any more meaningful to be able to split that, because olden days people used to say how many people have you hired, how many people what is the utilization, and that becomes in some form lead factor to be able to protect growth. We're saying currently it is not a supply constrained environment but a demand constrained environment, and therefore we should be able to fulfill as and when there are demand, and we are giving flavors in terms of what the demand is looking like, and as and when there is that available, it should be possible for us to fulfill the supply. And therefore we said the point of giving split of pricing and volume does not make any sense, because you will have non-linearity kind of a drive, etc. So it is not necessarily for every revenue growth that you get, it has to be linear in terms of headcount increase.
Can you add some color, sir, on the pricing trend and the stability in pricing?
Yes, I think pricing has been stable for quite some time with a little bit of uptick that we have seen year on year, quarter on quarter. And as we drive non-linearity, as we price it in terms of run the business to change the business models and increase our share of the revenues in both in a proper mix, I think we will see more and more price realization being stable. And we go forward also, our expectation would be that would be very, very stable. While overall, from a coupon price point of view, on the run the business, there will be pressure because more and more commoditization happening there with the technology, with these advanced technology kind of applications or consulting kind of thing where you can see pricing uptake. I think overall, you should be looking at pricing realization being more stable.
So are the newer deals which are getting contested happening at competitive pricing?
Absolutely. I think they're becoming definitely more competitive. But again, the engagements are much more in terms of end-to-end long-term contracts, and therefore ability to maneuver some of those cost drivers over a period of time allows us to be able to competitive. And particularly when you're using more and more tools that is being deployed to be able to drive productivity much more or manage your risk much superiorly, you are able to give win to the customer as well as retain the kind of price realizations which we have been used to.
Sure. To what extent are clients reacting to the currency depreciation? Are they asking for better pricing with that front, Mr. Senapati?
I think it is a question of yes and no. There may be some which has happened, some may not have happened. And similarly, when rupee appreciates also, things happen in a very mixed pocket depending upon what the customer is looking for. And some of those reactions and responses of the customer is independent of whether rupee has depreciated or not, because it is more dealing with the environment they are in as opposed to the environment we are in. And therefore, if they are under cost pressure and even if rupee has appreciated, they would look for opportunities to be able to take out cost and therefore able or agreeable to get into an arrangement on an end-to-end so that you are able to play with varieties of levers without compromising on customer satisfaction and delivering the targeted revenue saving, cost saving that they're looking for. So it's an ongoing engagement, long-term relationship, long-term contracts. So a lot of it based on the quality of solution that you deliver and the type of people in the front end and the customer satisfaction you deliver.
Mr. Kurin, let me come to you with regards to the deals this quarter. Have the win ratios improved, which is why the deal pipeline is looking stronger?
More or less stable. We don't see a great uptick or a great downtick. More or less stable. I think what we're seeing is newer geographies opening up and newer service lines opening up and more integrated deals in the pipeline.
Would you say that there is an improvement in the outlook with regards to discretionary spending in the US?
So here is what we are seeing. Surprisingly, the government shut down what took place a couple of weeks ago in the US. We are not seeing the negative impact of that as of now. The concern would be really in our retail business, because if you look at the seasons that the buying season typically starts in October and goes on till December, till Christmas. And that gives a huge boost to the economy. How the retail segment will pan out has been a little bit of a concern for us because we just don't know the answer to that. We're hoping it'll be neutral, if not mildly positive. But if it's not, if that affects us, we see discretionary spending in retail coming down. Banking and financial services is good. It continues to be there. People continue to spend, primarily driven by the fact that compliance is becoming a big issue. So it's a mixed bag. But overall, we see discretionary expenses. If I look at a secular trend, I don't see a great downward spiral as far as discretionary is concerned. Money will continue to be spent this year and next.